Now, speaking of interest rates, this next chart is a new one for this month. And what I tried to do is correlate the median sale price here in Brantford with the Bank of Canada interest rate decisions. So I've tried to show that here on this chart to give you a very visual representation of how these two have been related over the last couple of years. So the median sale price of a home here is in red, and in the light blue line is the Bank of Canada rate. You can see on the left side of this chart where interest rates were dropped to almost zero. They came down to 0.25% in response to the pandemic, and then they were held flat there for quite a long time. While that blue line is flatlining at the bottom of the chart, you can see the aggressive uptick in the red line, the median sale price of homes. And almost immediately is what you see happen when they started to raise the rates in March 2022. You see that blue line heading up. You see the immediate effect that had, bringing the red line, those prices back down into reality from that unsustainable peak. But the interesting thing is really happening on the right side of this chart, where you can see that the pricing pressure started to push back up again, even though rates have not yet come down. In fact, rates have been raised a couple times at the end of 2022, and then again in the summer of last year. And all that has still created upward pressure on the pricing. Now we're seeing that same trend continue. As we mentioned, the previous low point was November of 2023. And since then, prices are up 7% without rates going down. We've had rates being held, and some of the fixed rate products have come down a little bit. But you can imagine what's going to happen next when rates do come down. As that blue line starts to lower again, we should see an almost immediate effect pushing the red line, the median sale price of homes, back up. So speaking of interest rates, the March Bank of Canada announcement just passed us before recording this video, and it was no surprise that they announced a no change to the Bank of Canada interest rate policy. So that's the fifth consecutive meeting where they've held the rate at 5%. This has been the most stable that the interest rate has been in the recent years. There are 6 more announcement dates set for this coming year. I've got them up here on the screen. And the next chart that I'm going to show you is a summary of what the big 6 banks predict is going to happen over the year. Now, instead of trying to predict interest rates myself, the economists at these big 6 banks really do represent the majority of the financial marketplace here in Canada. So this chart is summarizing up their opinions that they've written in their reports and been on the news. And you can see that here in quarter one, that would be January, February, March. Nobody predicted that rates were going to come down at all, and that came true. So we're sitting here after the March announcement, still at the 5% level. But if we look into Q2, which is April, May, June, remembering that there's 2 potential announcements there in April and in June, that every single bank is predicting that the rates will come down. We're seeing anywhere from 0.25 to 0.5, depending on which bank you look at, but it's unanimous that everyone's predicting that the rates will be lowered in one of those next 2 meetings. Now, most people are predicting it might not be the April meeting, so to expect it to come down potentially in June. And I think that's the difference you're seeing here, whether the banks are predicting 1 rate drop or 2, because it would be logical to think that the rates are going to come down a quarter point at a time. But it's interesting to look further along this chart. And of course, the further you look out in the future, the less sure these predictions are. But it's interesting to see that every single Canadian bank is predicting the same thing, that rates are going to continue to fall through quarter 3 and even through quarter 4. And between the rates, we're looking at, anywhere from the rates being down a full point to 1 3/4 points, with National Bank predicting we end up at 3.25% by the end of the year. So you can see that everyone who's in the business of actually predicting this is pretty confidently saying that rates are going to come down this year. Now, it's important to remember that every time the interest rate comes down, it increases consumer confidence. And that's really what we're looking for out there in the real estate market. Buyers have to feel like, hey, this is a good time for me to invest in a home. I'm going to be able to afford my mortgage payment. My job is safe. And interest rates coming down gives people that confidence. It also lowers payments for anybody that's on a variable rate, flexible mortgage, or has a credit line that they're paying interest on. And at the same time, it's going to instantly increase the borrowing power of all the buyers who are out there applying for loans. So any move down in the interest rate is going to be seen as a instant stimulus into the real estate market, both from a psychological point of view and also from a purchasing power point of view. Interest rates will really be one of the big stories to watch for the real estate market, but it really is only half of the story that we need to tell. The other half of the story is going to be the balance of supply and demand.